Hello and welcome to today's video. Today is the 5th of November. You're looking at a daily chart of S&P 500. S&P 500 printed a indecision candle right here on Friday. You see this indecision candle. This happened after the Labor Department reported unemployment figures which were kind of mixed. So let's have a quick look through those readings and see what was in that report. So the Labor Department reported that the unemployment rate rose to 3.7% right here. Previous month it was 3.5%. Market was expecting it to tick up to 3.6%. So that suggested that there was some weakness in the labor market beginning to creep in. Offsetting that was the fact that the economy still added 261,000 jobs. That was well above what the market was expecting of 200,000. So that suggested that demand for workers is still strong. But on the positive side also, the average hourly earnings year over year rose 4.7% on an annualized basis. Previous month it was at 5%. That means wages were going up at a rate of 5%. It had gone up at 4.7%. So that showed that perhaps some wage pressures were easing. So it was a mixed bag. It was positive on the wage inflation, but negative on the fact that the economy was still adding more jobs. Negative from market's point of view. So all in all, investors looked at the report and couldn't decide whether they wanted to take the market higher or lower. S&P 500 printed the indecision candle. The question is, where do we go from here? Well, I think we might get some clue as to what happens next week, because on Thursday the Commerce Department is going to release the CPI report showing inflation at the consumer's level. So the market is now expecting right here inflation to come in at 8%, which would be below last month's reading of 8.2%. Now, since inflation rose at a rate of 9.1%, it's been gradually moving lower, 8.5, 8.2. But I think it's been stuck at the 8% level for quite some time, and I think market would want to see something below 8%. If the number comes in at 8 or higher, I think the market may not like it. But anything below 8, I think would be positive for the market, and we could see a rally. But 8 or 8.5, we could see a decline. Now, what S&P 500 has been doing is S&P 500 has been trading in this value range for a while. You can see it was making a series of higher lows. Then the FOMC happened and that higher low was breached. And S&P 500 had gone outside of this value range. It got pushed back inside it. So on Friday, it wasn't able to get back above it. So the question is, what are the levels that we should be looking for? I think if we look at the 4-hour chart, I think it would be clear. You can see that I'm going to draw some lines. So S&P 500 formed a low of 3,700, and then it traded as high as 3,800. So this is 3,800. So if you look at the hourly chart, I think it becomes clear. So you can see the 3,700 right here, which is the low, and that would be the near-term support. And then if it can get through this level right here, which is 3,800, I think then the market can very well move up to 3,900. So it's been, for the last 2 days, it's been coiling in this range. But if 3,700 is breached, then this level comes into play, which is 3,650, and finally the bottom of this range, which is around 3,570, 3,580 area. So I think once it comes out of this consolidation, either to the upside or downside, will decide whether or not market moves higher or lower. If I look at S&P 500 over a longer time period, so I'm just going to remove some of these lines. If you look at the monthly chart and I bring in the moving averages, what you notice is that S&P 500 had a massive rally from COVID lows, even before that. And what happened is that it pushed the prices well above the monthly 20 and 50-day moving averages. And since then, it's been pulling back. At the minimum, it needed to come to the monthly 50, which it did. Because if you look at the previous times when it has gone well above the monthly 20 and 50, it has come and touched the monthly 50 right here, monthly 50 right here, monthly 50. Then here it fell below the monthly 50, but monthly 50 was the minimum. Even here it undercut the monthly 50, so that was the minimum, and it did. The question is this the bottom? It doesn't look like it's the bottom, only because if I look at the MACD continues to move lower. MACD is not showing any sign of a crossover. It still remains well above the zero line, because normally, when it crosses over, you see this one sort of starts to curl over. It hasn't done so. And previous time, all the crossovers have happened above the zero line. The only other time the crossover happened below the zero line was in 2007 and 8. So right now we're still above the zero line, but we're heading lower. The question is whether or not it's going to cross over. That's to be seen. I mean, if you look at Russell 2000 on a monthly chart, you can see that the MACD, it was way up there. It started to move lower, and then it's now at this coming to the zero line. Looks like this black line is about to curl. You can see previous time it crossed over right at the zero line right here, right at the zero line right here. Only other time it crossed below the zero line was in 2007 and 8. So as long as so it's not sure that it's going to go all the way below the zero line, but it's showing sign that it may want to cross, because you can see that histogram is beginning to shrink. So in coming months, we'll find out whether this black line is going to make a U-turn or not, something similar to here. If so, that would be positive. SPY is not showing that yet, so SPY is hitting lower. So that suggests that we might still have a little bit more consolidation, at least looking at it from a monthly point of view. But obviously we'll have to look at smaller time frame to see whether things are changing over there, because things will first happen in a smaller time frame and then it will happen in larger time frame. So at least looking at the monthly chart, I'm not seeing the bottom just yet. If I look at the NASDAQ, starting off with the monthly chart, you can see that it had gone way above the monthly 20 and 50, and it started to come down. At the very minimum, it needed to come to the monthly 50, which it did. But I can see that MACD is continuing to fall, although it's coming to the zero line, but I'm not seeing any signs of a reversal or a crossover. Previous time it has crossed above the zero line, but more closer to the zero line. Only time it crossed below was in 2007, 2008. So we need to see if in coming months whether or not we start to see patterns of crossover. And that suggests that we might still continue to see some more consolidation based on the monthly chart. The other thing is that the gap between the monthly 200-day and monthly 50 is still wide. Historically, the gap wasn't that big. Anytime the gap widened to that level, we've seen some narrowing of the gap. So you can see there was a huge rally in 2000, and then the 200-day was right around here. It came all the way down to the 200. And then in 2007 and 8, it undercut the 200-day, monthly 200-day moving average. I'm not saying that it's going to fall all the way to the monthly 200, but I think this gap could very well narrow, because the monthly 200-day is moving higher, and the price can come down a little bit more. So in coming months, this gap can start to narrow. I don't know that it's going to fall. I wouldn't expect it to fall all the way to the monthly 200. That would be a lot, but the monthly 200 is around 5,000. What I would expect would be maybe the gap to narrow a little bit more. So that suggests to me, looking at a higher time frame, that there is still some ways to go before we can see some kind of a bottom. Now coming back to a smaller time frame on a daily basis, you can see that on a daily basis it's trading in this range. It had gone to the upper end of the range, and then FOMC happened, it got knocked down, and then it fell to the bottom of the range. If we look at the 4-hour chart, we can see the pattern a little bit clearly. So you can see that it's finding some support. So this is the first area of resistance, which is around 10,950. If it can break through this level, I would expect it to move to this level, which is the middle of this this range, and this is around 11,150. If it's able to break through 150, then I would expect to move to the upper end of this this box. But if it gets rejected at this midpoint and heads towards the bottom of this range again, then I think this bottom of this range is going to be at risk, because then it would be falling from a lower level. See, previously it was falling from this level all the way to here, so that's why it found support. But if it falls from this level, the midpoint level, then I think this level would be at risk, and then we would have to look at this level, 10,450, or possibly even lower. So, so those would be the ranges I would be looking out for. If we look at the bond market right now, just to see what's happening, so start off with the yields. Just get rid of this. So this is the April 2023. April 2023 closed at 5%. It had gone above the 5% after the FOMC, because Federal Reserve said that interest rate would be well above the highs. So, but after Friday's unemployment report, which showed some weakness, so it pulled back a little bit, closed at 5%. If I look at the June is still above 5%. It traded as high as 525, and then the September is still, above 5%. So the market is beginning to feel that maybe maybe Federal Reserve can increase interest rate above 5%. But I think data in coming months will provide more clarity. Like next week, when the CPI comes in, if CPI is hotter than expected, then I would expect yields, these Fed funds futures, to move more towards 525, possibly even to 550. If I look at the 10-year hasn't done much since the FOMC meeting. It's at 4.16. I think next Thursday, CPI report will provide some clarity. So not seeing much on the yields, but they remain quite high. If I look at dollar had a negative day, lost 2%, big red candle. It closed just above this, the bottom of this channel. You can see that MACD has come right at the zero line. You can see previous times when it came to the zero line, it crossed and moved higher. You can see right here, you can see right here. So it's right at the zero line again. If it moves higher, then we might have something similar to this, and we can expect price to rebound. But if it closes below the zero line, then I think there would be weakness, and I think this line, trend line, could be breached, and then we could have this downtrend line, would become much more active at that point. So I think the next few days we might get some more clarity as to whether or not dollar weakens. But at the moment, I'm seeing weaker momentum. You can see RSI has been making lower high. It's even on a weekly basis, I can see RSI has been making lower high. It's right at this level. This is a level from which it bounced a couple of times before. It's right at this level. If it breaks this level, then that would suggest that there is more weakness coming in coming weeks. So that's dollar, and weak dollar basically means gold moving higher. So gold bounced. If it needs to get through this level, 1680. If it gets through this level, then 1740 would be the next target. It's forming a nice base at this level. So dollar weakness should provide some support to gold. Another area that found support was oil. Weak dollar means higher oil prices. Oil is just below this previous swing high of 93.70. If it's able to get through this level, then this area 97.50 comes into play. So that's looking positive. You can see higher low being formed. So that's looking positive. If we look at some of the sectors that make up S&P 500 to see what's happening there, so this is XLK. The XLK is trading inside this range. Since the FOMC, it's under pressure. So XLK has a big weight in S&P 500. So that's going to drag S&P. That's going to put downward pressure on S&P 500. So weak technology sector. You can see the momentum indicators are also weak. XLY, another growth sector, is also showing weakness. It's now near the bottom of this range, so that also is putting downside pressure on S&P 500. But XLF, another big sector, financial, that's going higher. It's making higher lows, so that's providing support. So that's offsetting some of the downward pressure from XLK and XLY. Another big sector in S&P 500 is the healthcare, XLV. So that's also making higher lows. Even if it pulls back to the top of this value range and then rebounds, it would still make a higher low. So we want to see healthcare not weaken, so that should provide support to S&P 500. Industrials are also moving higher, you can see, but it forms a small weight in S&P 500. Nonetheless, it's moving higher. XLB, the materials, that's also moving higher. The only thing is that these are defensive sectors. You don't want to see defensive sectors moving higher. You want to see growth sectors moving higher. Now, because S&P 500 has a more balanced representation, that's why you're seeing S&P 500 holding up better than NASDAQ. NASDAQ is tech heavy and techs are under pressure. So that's why NASDAQ is underperforming. If you look at this XLY, XLP, you can see that this ratio has been coming down. This is a ratio. That means growth has been underperforming value. Now this ratio is coming near some of these previous lows right here. Now this is mid-June. Market, we know, rallied. So the question is whether or not growth has fallen far enough below that there might be some rotation from value into growth. If so, then we could see some bear market rally because this ratio is coming to levels where it found some support. But at the moment, growth is underperforming value. What we want to see during market bottoms, we want to see growth outperforming value. I just look at a couple of stocks and then we'll wrap it up. So I want to look at Tesla on a weekly basis. So this is Tesla on a weekly basis. You can see this is a very important level. This is 205. It hasn't closed below 205 for a while. So if it closed below this 205 level, then I think it can go to the bottom of this channel. So at the moment you can see that it's a downward sloping channel. So the bottom of the channel would be around 185 right here. So that will also bring it to this level. You can see on a weekly basis, MACD is moving lower. If I look at the monthly chart, you can see, and bring in the moving averages, you can see the massive run up way above the monthly 20 and 50 moving averages. You can see previously whenever it rallied, it at least came and touched the monthly 50. So you can see right here, you can see right here. So at the very least, I would expect it to come to the monthly 50. The monthly 50 is around 185. You can see on a monthly basis, MACD continues to move lower, but still remains well above the zero line. So it looks like it has little ways to go. So that suggests that maybe we could see some more weakness in coming, since this is a weekly and monthly chart. In coming weeks and months, not Monday, not Tuesday, in coming weeks and months. Another one I look at is Apple. So Apple also, this is an important level, 137. If I show the monthly chart, you can see a number of months it interacted with this level. At the moment, there is a battle going on at the monthly 20-day moving average. Again, like Tesla, massive run up, way above the monthly 20 and 50. It hasn't even come to the monthly 50. Previously, whenever it had a massive run up, it came and touched the monthly 50, which is right here, right here, right here. So the monthly 50 is around 116. So at the very least, I would think that it would come and touch the monthly 50. You can see MACD is continuing to move lower, still remains well above the zero line. It's right here. So it looks like it has some ways to go, and since this is a monthly chart, this would happen over months. But looking at the monthly chart and weekly chart, it looks like there could be a little bit more pain for Apple in coming weeks and coming months. Not Monday, Tuesday, but coming weeks and coming months. All right, I'll leave it there. I'll make another video highlighting some individual stocks that I'm seeing that might be worth keeping an eye on. Thank you very much for watching the video. If you like the content, please consider subscribing or sharing the channel. Thank you very much.